Hi friends, in the last video we discussed about a lot of headwinds for the global economies, global markets and our markets as well. The start of 2019 we have seen a lot of these headwinds now sort of becoming tailwinds and in the form of I can say the low commodity prices, low crude prices, yield softening in India, interest rates probably heading southwards. So all these positive points seem that the macro, which was sort of deteriorating towards September or October of 2018, now seem to be improving a bit. On the global front, what we have seen is the US markets sort of are getting into a recessionary mode or in a slowdown mode. There is not enough evident data points, or there are in fact contradictory data points which suggest that whether it's in a recession or a slowdown. But now, importantly, the rate hikes which were going to be more prominent or more aggressive are not going to be as aggressive, and that probably emerging markets can have a sigh of relief over there. Chinese data points, if somebody goes by what data print got released yesterday, a 6.6% type of a growth, which was sort of a 28-year low growth for the Chinese economy. So some measures to spur the economy or some stimulus will be surely required for the Chinese economy. And what is derived from the trade war rhetoric with US also needs to be seen over here. Locally, again, we are at the outset of the earnings season. We are already seeing some earnings already coming in. The likes of big boys and the large cap leaders like Reliance, HDFC Bank, HUL, Infosys, all these companies coming up so far with good set of numbers. Of course, the key part here would be the management commentaries that a lot of such managements would come after the results and talk about. Here NBFCs as well as some consumption companies as well as auto companies would be key here, that what the management thinks about in the next 3 to 6 months is what will be keenly watched by the participants. Another important event coming is the interim budget, or the vote on account as it is normally called, where this time there can be a bit of policy decisions or socio-economic decisions which can be taken. There would be some farm boost or some rural India boost which the budget could bring in, some bit of healthcare and infrastructure boost, and also for the salaried class there will be a bit of I can say tax cuts or something which the market is expecting, so that it puts money in the hand of the consumer or also on the hand of the rural consumer or the farmers as well. So I think all this is expected out of the budget, but the key to the markets here is the fiscal deficit number, whether it is getting breached or it is adhered to. So my sense is, if this is adhered to or a slight breach, the market will take in its stride. Otherwise it's going to be a little bit dampener for the sentiment. There is also an increased probability of a rate cut by RBI, seeing the low inflation data points in India as well as the industrial production, which is right now suffering. Now on the strategy, what we are employing is we have always been more with market leaders, the number 1, 2 and 3 market leaders in their respective sectors, where they have a lot of wherewithal to have good margins, to maintain their margins, to expand their margins, as well as sort of an oligopolistic business which they carry. So this type of businesses which are favored for our portfolio construction activity. Also on the real portfolio construction side, on the sectors, we still prefer private banks, certain NBFCs. We like few consumer businesses which are, I can say, reasonably valued. We like building materials as a sector. A lot of paints, adhesives, all these businesses are doing fabulously well. Some new sector which we are looking at are sort of capex, capital goods or capex allied sectors. Of course, there are no more candidates here, not much candidates here, but we are on the hunt for looking out for some businesses where capex can probably return in the next 6 months or 9 months period. Here again I would stress on the quality of the business, which is very, very important. So between low quality businesses with cheap valuations and high quality businesses with I can say reasonable valuations, the choice would always go for the latter, as it comes with good stress adjusted returns and a peaceful night's sleep. Thank you friends, happy investing to all of you.